Ladies and gentlemen, welcome back to the channel. AMC Stock is in the green today. Yes, a pretty good day for AMC Stock. It's really a mixed bag across the board. There was some data today. There is a couple pretty interesting developments, kind of negative developments with the Middle East crisis, as well as JP Morgan and Jamie Dimon selling stock for the first time ever. Not really signaling great things for the markets. So we're going to get into exactly what's going on today, give you guys the latest on AMC stock. We are seeing a little pop again in cost to borrow fees here today. Overall, I think AMC stock is about to make some big moves higher. We'll talk about it here in this video. In the meantime, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section, guys. So first things first, AMC stock. It's up 3% here on the day. It really is a mixed bag. Some stocks are doing really well. Some stocks are doing really bad today. There's no clear direction of a secular move. And what I mean by that is yesterday it was clear. Big tech was selling off. Small caps were doing well. Pretty just in your face obvious. Today it's a little bit of both. Big tech is doing okay, at least most of it. Some of your small caps are doing well. Now, yesterday may have started a new trend of big tech actually falling and small and mid cap stocks recovering. I think you really need to get Apple out the way. But at this point, it makes a lot more sense to be in small and mid cap stocks that are going to benefit from rate cuts next year, rather than being your big tech names that have no benefit to rate cuts next year. And like you can see from this forward PE ratio chart of the S&P 500 in red, the green and the blue lines essentially small caps. You really haven't seen what we've seen over the past 2 years, over the last 20 years, where the S&P 500 is trading at a higher forward multiple than small cap stocks. That should normally not happen, but it's happened over the past 3 years or so. So S&P valuations are going to come down. Small cap stocks are going to go up. At least that's my personal opinion, to get back into kind of a normal range of what we have done. So I think that bodes good for small and mid cap stocks. I think that is really good for AMC, and I think that's part of the reason why AMC stock is outperforming. Again, if you think about it on a risk to reward basis, what's the risk with AMC? Sure, stocks can go to zero, right? What's the chance of that? Well, it's obviously very, very low. What's the chance that AMC goes to $7? Well, that's decent. There's a decent chance of that. But, I mean, what's the chance AMC goes to 10 or 20 or 30 or 40? That's a really good chance as well. So on a risk to reward basis, it doesn't make a whole lot of sense to be short in AMC or just negative whatsoever, especially considering this selling that you have seen in the markets. AMC stock has not sold off to the same degree. It's kind of just been trading sideways for a while here. So you're really not getting that big downside like you have seen in other big tech names. Also pretty encouraging. Now, let's get into some of the interesting developments here on the day today. Key Fed inflation gauge rose 0.3% as expected in September. Spending tops the estimate. So you came in line with expectations for your core month-over-month PCE. It's not great, but it's not terrible at the same time. Okay, that's kind of, it could have been worse, is always going to be the Fed's narrative if you get data that's in line. Now, personal spending kept up and then some, rising 0.7%, which was better than the 0.5% forecast. You're really seeing what looks like a soft landing playing out. As long as inflation continues to come down and we don't have big shocks out there in the economy, it looks like you're probably going into a soft landing now. Just the data doesn't support this hard landing narrative. I know what you guys are thinking. Like, hey, you're already seeing a recession. People are already not doing well. And that's true, but we're just not seeing that in the data, so the markets are not reacting to it. So that was a big event on the day today. The second big event on the day today is this. JP Morgan chief Dimon to sell some of his own company stock for the first time. It says billionaire Diamond and his family intend to sell 1 million of the 8.6 million shares they own, subject to the terms of a stock trading plan, the bank said in a regulatory filing. The sale would fetch nearly 141 million, with a remaining stake of about 1.07 billion based on Thursday's closing price. It will account for less than 10% of Diamond's holdings, which also include performance shares that have not vested and stock options. This is just one of those things that doesn't exactly look good for a CEO to do, because he hasn't sold stock in his whole tenure at JP Morgan, which is almost 18 years now. He's been through a lot of crises, right? '08, Rona, different smaller crises during that time, and hasn't sold stock. You could argue he's, getting to an older age, and what he says is, quote, financial diversification and tax planning purposes, and he continues to believe the company's prospects are very strong, the bank said in a filing. So he's obviously not going to come out and say we're having problems or we see trouble ahead for the banking sector or the economy, but that's what people are implying today. So that's not exactly great news for your banks or really for the markets. Now, some of the news that came out last night was pretty troublesome. It says U.S. fighter jets strike Iran-linked sites in Syria in retaliation for attacks on U.S. troops. It says they hit two locations in eastern Syria linked to Iran's Revolutionary Guard Corps, the Pentagon said, in retaliation for a slew of drone and missile attacks against U.S. bases and personnel in the region that began early last week. The U.S. strikes reflect the Biden administration's determination to maintain a delicate balance. The U.S. wants to hit Iranian-backed groups suspected of targeting the U.S. as strongly as possible to deter future aggression, possibly fueled by Israel's war against Hamas, while also working to avoid inflaming the region and provoking a wider conflict. According to a senior U.S. military official, the precision strikes were carried out near Bakhmul by two F-16 fighter jets, and they struck weapons and ammunition storage areas that were connected to the IRGC. The official said there had been Iranian-aligned militia and IRGC personnel on the base and no civilians, but the U.S. does not have any information yet on casualties or assessment of damage. The official would not say how many munitions were launched by the F-16s. Now, IRGC and militia were on scene. So if you guys don't know what the IRGC is, it's the Islamic Revolutionary Guard. It was established in May of 1979 in the aftermath of the Islamic Revolution. It is a branch of the Iran military. So we did strike Iran's military capabilities. In Syria, there were also militias there. We still don't have any definitive details if there was, people that were injured or, what happened. But it's not a good situation. It opens the door up for potentially a larger, conflict with us, Iran, Hezbollah, other individuals as well. Now, what we're also seeing right now is one of the largest bombardments of Gaza that we have seen in a very long time, as you can see from this video. Maybe that ground incursion could be starting a little sooner, maybe right around the corner. We'll have to wait and see. This is something the markets are not really reacting to here today. The S&P is pretty flat. The Nasdaq is up like 1%. You're not getting that fear move as well in something like a gold. Gold's actually down on the day today, so you're just not seeing that effect. TLT is down 0.85%. Again, you're not getting that fear move. People are not flooding to buy the bonds. They're not flooding to buy gold, so that is good. We'll see, though, once that invasion actually starts, or if we just get some kind of retaliation from Iran or a statement, then you want to watch to see if those fear assets start to perform and, start to go higher. That's going to be a sign of where the money is going. But as of right now, nothing I can report that is too definitive. I do think yesterday, again, might have started this trend of sell big tech, buy small cap stocks. And I think that's going to benefit AMC a lot more than your average stock. Now, next week is a loaded week as far as earnings. A lot of very popular names. Monday pre-market, SoFi, McDonald's. Monday after hours, Arista, Pinterest. Tuesday pre-market, Pfizer, Caterpillar, BP, Amgen. Tuesday after hours, AMD, First Solar, Paycom, Caesars, Match Group. Wednesday pre-market, Norwegian Cruise Line, CVS Health, Humana, Wayfair, Kraft Heinz, Estee Lauder. Wednesday after hours, PayPal, Roku, Qualcomm, Supermicro, SolarEdge, Airbnb, Etsy, Mercado Libre, Elf. Thursday pre-market, Palantir, Shopify, Eli Lilly, Novo Nordisk, Moderna, Crocs, Barrick, Penn National Gaming. Thursday after hours is the big dog, Apple, Block, DraftKings, Carvana, Fortinet, Starbucks, Coinbase, Pioneer, Cloudflare. And then Friday pre-market, one of my largest holdings right now, Fubo TV, will report earnings. So you do have a jam-packed week as far as earnings. The earnings story is not over until you get Apple. That's really the last big dog that will move your broader markets, your big tech stocks that control the broader markets. If Apple has bad earnings, the stock could get wrecked. If Apple gets wrecked, then it's pretty safe to say the markets are going to get wrecked at that point. Now, if we look at the bond yields today, 30-year Treasury yields are up 5.5 basis points today. 10-year Treasury yields are up 3.5 basis points today. That's probably why you're getting that push and pull. Some stocks doing well, some stocks not. Because unlike yesterday, you did have 10, 20, 30-year Treasury yields falling a lot, and that was obviously helping to drive that momentum for your small and mid-cap stocks. Not exactly happening today, although it's not a huge up day as far as bond yields. It's still an up day as far as bond yields. Now, let's take a look at the Ortex data here. You have a short score of 6.7. You have a short interest of 6.74%, 13.34 million shares that are currently sold short. Cost bar average 1.67%, cost bar max 6.17%, cost bar minimum 1.04%. You guys got to take these numbers with a big grain of salt. I don't think they are accurate in the least imaginable sense. I do think there is a lot of covering up of these short positions, as I have reported, a while ago. The U.S. SEC just passed a new rule to shine light on short selling, which should be going into effect late in November. It's already been passed, but we're going to basically know who is short, how long they've been short, what kind of collateral they're using to be short or put up for their short position. We're going to know what prime broker is helping, who facilitate these short positions. A lot of clarity that we just don't have right now. We are going to get here in the not too distant future. So I think the last couple of weeks, you've seen the short interest numbers come down a lot. You've seen the data really come down a lot. And I think it's just because they're trying to get their P's and Q's correct before their positions are, put out there. They're trying to cover up those positions before they are essentially exposed, right? Especially if there's only a couple firms that have really large short positions. That's something they don't exactly want let out to the public. Now, if you take a look at the option activity, it's been very bullish over the past week. 14 orders totaling $454.53 thousand with a positive order value of 81%. So it's definitely really, really positive. And even if you look at the put to call ratio over the next 1,000 days for options, you're looking at 0.72. If you look at Apple, a Tesla, a Microsoft, a Google, and Amazon, basically any other stock, it's not going to be lower than this, right? The lower, the better. The lower, the more calls relative to puts. So AMC is one of the most, if not the most bullish option chain that I can find, just period out there on any stock. I've looked. I want to find a stock that is more bullish than AMC on the option chain, and I just cannot. Another reason why I do think AMC stock is due for a huge rally to the upside. Now, if you look at just the overall raw data here, you have a short score of 53, $122 million worth of short positions, estimated short interest of free float at 6.68%, free float out on loan at 8.25%, shares out on loan 16.31 million, days to cover 0.85, cost to borrow 1.22, and utilization of 39.71, probably a better way to put it. All of the data on a short squeeze basis has basically been deteriorating. I just don't find that logical given what AMC stock has actually done. I would put my money out there to say that these are 100% not true figures that we are seeing over here on Ortex. Could be wrong. I'm not a financial advisor. I'm not a financial planner. So I could be wrong, but I just don't think that makes a whole lot of sense as of right now. Now, if you take a look at the Stock Tracker data, you do have calls in the money 23,668, calls out the money 73,000, puts in the money 3,000, puts out the money 39,000. So you do have a lot of option activity today, a lot of which is going to expire in the money, a lot of which is going to expire out the money. For next week, you have about 5,000 calls currently in the money, 33,000 calls out the money, 2,500 puts in the money, and 22,300 puts that are out of the money for next week. So I do think a lot of this option activity this week's going to roll over into next week, and I think that's going to make for a very volatile next week. All things considered, with this Middle East situation, we're probably going to get a response from Iran over this weekend due to the strikes that we just put out. You're probably going to get an escalation of this, Israel incursion. That's probably not going to be great for the market. So if you want to have any exposure to that, if you want to have any downside protection on your portfolios, the best and probably only time to do that is by the end of the day today. We'll see. Who knows? Next week could be very bullish, but it does make some sense to have some exposure on any downside protection on your portfolio right now. So that is going to go ahead and do it for this video. We did cover a lot in hopefully a short amount of time. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.